Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors. We've developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It's because of our years of experience, attention to detail, and exceptional customer service that we're the right choice. Call us today.
All right, so listen, I've got 3 platforms up here today. I've got eSignal, and then I've got multi-charts, which works just like TradeStation. And then, of course, I've got the NinjaTrader up here as well. So I've got all sorts of interesting and cool things up there. And the Trade Confirmer is still filling in there. Okay, so, depending on what platform you're using, terrific. Now, Joy, I know you had a problem with your NinjaTrader platform because you emailed me. Are you okay on that? Hopefully you are. What happened was when you load symbols in the scanner on NinjaTrader, they have pre-fit or pre-developed instrument lists. And what happens is sometimes, between updates, a symbol, all right, gets replaced with a new symbol, or it's just simply the company may go bankrupt and they remove the symbol. And when you get that and load a list of symbols into the scanner, or even a chart, you're going to get a little black warning message that comes up that you have to click OK that says the symbol is no longer there. That doesn't mean that you have an error in your platform. It's just telling you that the symbol is not there. Okay. So please realize that. Now, the other thing that's interesting that I think, Joy, you brought up was that if you're using a VPN, all right, everybody knows, there's VPNs are used for, sometimes accessing sites and you want to be secure or the whole 9 yards. Problem with VPNs, though, is they can also screw up your identification MAC address, and that can cause issues with software. So if your software requires a license and goes and pings a server and you're running a VPN, you may have trouble with that. Depends on the VPN. All right, some people use a VPN, they don't have any problems, some do. I have found with some of the ART software, because we ping servers for activation, you may have certain VPNs that have a problem with that. So the answer to that is just turn the VPN off when you have your charts open. You don't need it all the time. So if you have a VPN and you just turn it off and then you use the regular internet as it comes across from your ISP. All right. Then when you're done trading or done looking at charts, you can turn the VPN back on if you need to. That's the simplest way to certainly handle that. Now, one of the things, couple things I want to just go over in multi-charts here. One thing in multi-charts that's a little different is that, every platform has a little bit different programming and customization. And there's certain things we can do on some platforms that we can't do on the others. For example, we put pink dots on TradeStation for wave 3s, and we actually on eSignal and NinjaTrader, we can actually write the word wave 3. All right, so we go to eSignal. All right, let's take a look at a bunch of charts here. You can see where we actually write the word wave 3. Same with Ninja. Okay, Ninja writes the wave 3 too. So that's kind of a cool thing. The other thing that eSignal does and Ninja does is they allow us to put a black line indicating the number of bars back the system is looking to find a wave 3. Okay, and so that's kind of cool. All right, and the same thing, you get the same thing on NinjaTrader. Okay, here's what it looks like on NinjaTrader. Okay, there's your wave 3. So same type of idea. In fact, on NinjaTrader, we even give you little up arrows. All right, but we can't do that programming on all platforms. So sometimes you'll see it and sometimes you won't, depending on the platform. And here is the little black line for 144 price bars on Ninja. So some platforms have restrictions and some don't. For example, on what is it? I want to say MetaTrader, I think. We cannot program the pyramids. Their software code does not allow for the drawing of certain icons on chart symbols. All right. So we can't do the art software on that, but we can do the OWL and PTF and things like that. So there are restrictions. Now, on multi-charts, one of the interesting restrictions here is that notice all the pink dots. In multi-charts, we cannot program the system to remove the previous pink dots based on how our system looks for wave threes. So instead, it lists all of them. So you have to pay attention to the most current one. But the reason why they formed before is because the 144 price bar look back changes all the time. So that's why you have so many different pink dots. All right, so that's kind of important to note. And you may notice other little things as well, okay? So a little bit different for different platforms. So when we look at one particular platform and it doesn't look exactly the same on yours, that's why, all right? Just different in programming. Now, the code that we do the actual studies in is all the same. It's exactly the same. That we're not going to change. And if we can't make that the same, then we won't program for that platform. So the signals will be exactly, the coding for the signals are the same. What I'm talking about are like cosmetic things or a little bit of bells and whistles. All right, so just know that and rest assured that they're same. Now, what's interesting also too is you've got to also realize that when you are looking at, for example, the scanner, and this is really an issue for multi-charts and also for NinjaTrader, not so much for TradeStation. You've got to make sure that the look back in the scanner for the trade confirmer and the OWL, all right, is 600 bars. Because if you don't have 600 bars, you can get different readings. So it always has to be 600 bars. All right, and if you had a problem with that, that will fix it. So the look back has to be 600 bars. And again, that's something that every program has that as a default and some don't. Multi-charts only defaults to 50. So that type of thing. All right. Let's see. Joy's got a question here. When Ninja connects to TD Ameritrade, does my account info become available, or is it just price? It's just prices. All right. Joy, I think you have a paranoid personality with people stealing your information at certain times. And that's not a bad thing for certain things, but you don't have to worry about it on all things, okay? Which is probably why you're using a VPN all the time. All right, so I love you dearly, but you got to not worry about that so much when you're in programs that are okay. All right, I do understand what you're saying, okay? And there is times to be worried about that. But in something like the NinjaTrader thing, you don't have to worry about that. It's just they need that information in order to connect to your data provider. Now, if you have the professional license for a broker, all right, then you're actually going to give them access, all right, to your brokerage account if you're going to enter your orders in through there. But again, you know, that information is available at TD Ameritrade, and you know, NinjaTrader is just connecting that for your convenience. All right, so don't worry about stuff like that. Okay, you're okay. James is saying just because you are paranoid doesn't mean they are not going to get you. Absolutely not. No, and I understand it. I get it. But with Joy, I just want you to realize it's okay. All right. All right, so you're okay. So don't use the VPN when you're connected for trading, and don't use it when you have charts open, okay? Then you'll be okay. Every place else, hey, I don't care, use it. And I have one. I mean, I use it, okay? We're all paranoid a little bit about our data. You know, all you have to do is cut the news on and somebody stole data from Facebook or one of these places. So I get that, all right? But you don't have to worry about that with these things. I'd be more worried about somebody hacking into TD Ameritrade and stealing the information directly from them, you know, that way. But anyway, so there you have it. Okay, I think I got all the questions answered there. I know you guys can't see them, but I think you got them. Let's see who else I've got here today. I've got, oh, Scott Ricky. Hi, Scott Ricky. I haven't seen you in a long time. Scott is a fellow Californian. He's a doctor, and good to have you here. Okay, hello. How are you? Good to have you here. All right, so let's see who else we got here. We got everybody here. All right. I was hoping to see if I had my friend from Thailand, Joe, here, but I don't see him here today. But then again, it's like, 2 o'clock in the morning, so I don't expect him to be here. All right, so let's see. All right, so what do you want to talk about? What do you want to talk about today? Anybody throw up a question, feel free to throw up a question. I have NVIDIA here today in front of me, all right? And the weekly chart looks really good for a move to the upside eventually, though the daily chart is showing some more bearishness before that happens. All right, Joy's asking a question. On a weekly chart, how many weeks do we load on the scanner? How many minutes for, okay, on the scanner, all right, what you want to have is 600 bars. Okay, always have 600 bars as a minimum, because that way the scanner will match the charts, regardless of how many bars you have on the charts. Okay, so 600 is the magic number. Okay, in terms of the charts, I would load, for example, when I look at a chart, what I try to do is get to the beginning of a particular trend I'm looking at. All right. Sometimes, you can go back years. All right. And if you're on a daily chart, you'll see nothing but spaghetti. All right. So, no matter how far you go back, it's still bad. So you move on. All right. But take a look at this, for example. Now, this is a weekly chart. I got 5,000 bars loaded. All right. But I've had 6,000 at times and things like that. All right. I do not have 5,000 bars. You do not want to have 5,000 bars on a 2-minute chart. Okay. It'll take forever to load. You don't need that. But on a weekly chart, all right, I try to go back to the beginning of the trend. All right. And sometimes, if I'm looking at a 60-minute chart and I have 90 price bars, it's not enough. I have to go to maybe 190 price bars. Whatever it takes to go back to this beginning. This is what I mean by the beginning, because this is where it rose from the ashes, so to speak. Okay. So you got to go back to the ashes. All right, and then follow it on up. Okay, so that's what I do, because if you showed up here, all right, your analysis is going to be different than if you start from where you should at the beginning of the trend. Now, if you get to a beginning of a trend, it's very hard to decipher. Okay, now take a look at this. All right, so I'm looking at the weekly chart. So when I go to the daily chart, I don't really need to go way back here. Okay, I can start here because I know that's a 4. All right, so I'm going to be working on trying to get up to this target range based off information that's pertinent to me from wave 4, because that's the trend I'm in. I'm in wave 5. All right, so it's that kind of thing. All right, does that help you? All right, so on a 5-minute chart, go back to see if you can go back to the beginning of the dominant trend on the 5-minute chart. So for example, this is a 60-minute chart. Now, let me just do this. I'll open this baby up. All right, and change it to a 5. So this has pretty much been moving up for quite some time, hasn't it? So I could probably even go back. I'd want to make sure that this is the beginning, all right, because you can see it's been moving up for quite some time. So just put enough bars back there, all right, that you can do that. All right, so if I edit chart here, go up to NVIDIA. Whoops. Let me go time template. All right, so maybe I'll put a little bit more up here. Now you can do days or you can do the number of bars. But you see, here's the beginning of this move to the upside, way back here. All right, which is only, all right, that's back in August. So you can see it's been moving predominantly up and up and up. So if you drew a trend line from here to here, like this, actually, I'll use this. All right, it's pretty much up there, right? So you know, there you have it. It's still loading so many price bars. It's still loading the owl. So when the owl gets loaded, we'll see what's the owl says on this as well. But you want to go back to the beginning of the move up. That's the best way for me to answer that. Now, if you're analyzing one little area based off the 10-minute chart, you kind of want to see what's going on there. You can do that. Okay, you can certainly do that. All right. So you're in, you know, you're in the throes of a dominant move to the upside. But you're coming down a little bit, but it doesn't necessarily mean until it breaks this support level here that you're going to have a change in trend. So if we erase this trend line here and draw a straight trend in here, this is your major support on the 5-minute. This is the video, so it's $206. It's expensive. All right, now if I'm analyzing, if I'm on the daily chart, and I'm kind of analyzing this move in here, then you can very specifically go to a, you know, this is a daily, you can go to a 60-minute and take a look at what's going on in there a little bit better. But you see, it shows a high inclination of coming below here. All right, so we're probably going to be in this broadband channel for a while if that PTF is right. Okay, long term, all right, it's looking good, but it could take years to get up to this area for the target zone. So I would rather on the video, I'd rather take a trade based on a long-term trade because it's the clearest, it is the clearest chart. So I would rather do that than take a trade on one of the shorter term intervals at this point. Okay. So I always trade the clearest chart, but I look at all three. All right, let's see what we got here. Inside line of the PTF we don't use. Okay, it's only used to change the color of the PTF, and that's for out. All right, got that. In TS, how do I check the number of bars loaded? Terry, I think they're in the data area. That's how you can check the number of bars loaded. I think they give you an option for days and bars, as I recall. Sometimes, okay, there are waves with inside waves. We all know that. But sometimes, you know, the time frame, we have to go to find the right time frame to be able to count the waves in a wave, okay? For example, what I do is usually do like 5 time frames, at least 5 time frames. In fact, I, you know, really probably should be more accurately on a, you know, like a 240-minute chart if I want to do the exactness of it. Okay, that would probably be a better chart to use for this. But I've just always used the 60 before, so. But I change it around depending on how clear the count is, okay? Okay, and which is the most important time frame? I think they're all important. I think it depends on, again, try to look at the overall picture. You know, you've got the, on the far left, you've got the minutes chart. And so that's going to give you the short-term situation. In the middle, you got the daily, that's the intermediate. And then on the right, you got the weekly. And this is all the same market. So the idea is, you know, basically by looking at this, it looks like from a long-term perspective, based on our fib extensions, we got a target zone here. Okay, Elliott wave count is 3, 4, 5. All right, so this would be the 3 here, 4 here, moving up here. But this is showing here, either this PTF is wrong, all right, or the market's going to go into a range bound or maybe a complex correction. Don't know. Now, it doesn't mean that we're not going to get up here, okay, but it does mean it's not going to do it right away, perhaps, and that's what we got to take from it. Now, in terms of making a trade off here, all right, I probably want to wait until this turns green or at least yellow, okay? If I'm already in the trade based off an earlier entry point, my stop would be here, I would just leave it. This here, all right, is showing we've had a bunch of pyramids in a row, all right, and we're moving on up here, but it hasn't really broken down yet. So it's still moving to the upside. So that gives you the perspective. Now, choosing a time frame to trade, all right, is based on choosing one in which makes sense. For example, I'm not going to take a long trade here, all right, simply because the PTF is red. All right, I'm more apt to take a long trade here, but I'm probably going to want to wait until the PTF turns either yellow or green on the daily, all right, for a timing situation. Just because I don't want to get stuck in a channeling market and add another year on or 6 months on to a trade. So you use these, you kind of use them in conjunction, but also in your mind keep them separate in terms of time frames and what they're telling you. All right, George, does that help? Hopefully that helps. Yeah, the squiggly line really has no meaning except for, okay, good, George. Al, except for the fact that we use it in terms of it does, if it goes above the upper green band, it will turn the background green, and meaning more highs are coming. If it goes below it, it will turn the band red, meaning more lows, okay? So that's the idea behind it. Now here is kind of interesting because here, all right, if you look at this one on the PTF, PTF is this indicator here for those that don't know where it is. This is the PTF here, all right? So here, okay, when it goes from a solid red to a solid green or a solid green to a solid red, it's wrong, all right? It was wrong. And it's wrong 25% of the time. All right, when it goes from a solid to a yellow, it's right. And so in a case like this, all right, as soon as it turns green, all right, then boom, okay? But here it turned red, all right, and then it turned yellow, and then green again. So it oscillates, and sometimes it's wrong. 25% of the time it's wrong. All right, but that is a low percentage in the markets. So I kind of rely on it, even though I realize that, hey, it may not be right all the time. I still try to go with the statistical probability of something that gives me an edge. Okay, so there you have it. How can the PTF be wrong? Oh, that's a good question. Anybody want to answer that? Joy is asking, how can the PTF be wrong? Good question. How could it be wrong? Because it measures momentum. And so when the momentum peaks in one direction, it will turn a certain color. So for example, if it's moving to the upside, then it turns that squiggly line, the oscillator line, goes above the upper band, it will turn it green, meaning an abundance of momentum came in on that high, causing it to turn bullish, green, indicating there's a high probability, not certainty, probability that we'll get more highs. However, bearishness then comes into the market, and the bearishness gets extreme to a point where it turns it red. That means at this point, there's more bearishness than there was bullishness, and therefore now all the bets are off on the long position, and we're going to have more lows, okay? So that's how it changes. It tries to keep you current. That's the idea. Let's see here what we got. All right, Richard's asking on NinjaTrader, how do you check the bars back? Let me see here. you go to columns, go to trade confirmer. This is also important for Elliott wave scanner too. And you want to go here, bars to load. Okay. Sure. Okay, just make that sure that's 600. I'll erase that scanner. Okay, so that will help you there. All right. Let's see what we got here. Boy, a ton of questions here. All right, now. Okay, so does anybody else want to chime in on how they choose how many bars they want to put on a chart? Just in case, we have some more questions coming in on that. My answer to that is try to get a clear picture of the trend. And also, if you can, in the Elliott wave, sometimes you can, sometimes you can't. Enough to see the trend. Al's right. Okay, enough to see the trend. That's the answer. And enough to see the trend that you're also analyzing. For example, if I'm analyzing this move here, what I really care about is this here on this chart. All right, I don't need to go back and look at the beginning of the trend here so much because I can see it here. Okay. No, there's no. It's a little bit of an art, Joy. It's a little bit of an art on how many bars to put back. See, this is one of the nice things for you about the cash flow strategy is it doesn't really matter. All right, how many bars back? The only thing that matters is that you have the trade confirmer set to 600 bars so that you get the same readings on the trade confirmer as you do on the charts. Okay, but other than that, basically you're just looking at the specifics of the cash flow strategy, and it doesn't require a lot of history. OH1, not sure what that is all about. Al, not sure if that's a symbol or what. Let me know. All right, Joy, got that question, I think. Yes, it needs to be yellow. The PTF needs to be yellow, all right, for it to be accurate, okay, in terms of that. In other words, if it has, like here, all right, if it has a green reading here, okay, it's going to go yellow when prices go above the high in that green area. It will stay green if the momentum is still super high when it makes the next high. If it's not, it'll turn yellow. But what it's saying is that it did make another high, which it proves the green to be correct. Okay, Patrick saying on the GoToWebinar console panel, it doesn't say the webinar is being recorded like it's I am recording it, so I thank you, Patrick, for bringing that to my attention. It is being recorded on my end, so it's kind of automated the way they do that, but I don't know what you're seeing there. And I got to be honest, I've gotten a few emails from these folks at Citrix, and so I think they're working on stuff over there. So who knows what's going on over there? But to my knowledge, I'm showing it's being recorded here. But thank you for bringing that to my attention. All right, because it's interesting. Mine says it's being recorded there. I'm surprised you even see that it's being recorded, actually. Okay. Thank you, Al. Okay. His O is O. Good. Got it. And the only reason, I mean, when you look at a squiggly line in an indicator, there is a trend in it. There can be pennants forming in it, but we don't use it that way, okay? And I try to keep it simple so you don't have so much information overload. So the way I really designed the PTF was to be basically color-based. And again, the PTF you kind of use it as if, my best analogy on the PTF, and I've said this many times, so I hope I don't bore people with this, but my best analogy of the PTF is if you had a trading partner sitting next to you, and you can call that trading partner Mr. and Mrs. PTF. And when it's green, you turn, it's when you turn to the trading partner and you say, well, the market just made another high. What do you think? You think it's going to go higher than that? And the PTF trading partner says, well, yes, meaning it's green. Okay, if there's that much momentum and he thinks it's going higher, he'll say yes, which is the equivalent of being green. All right, if he shrugs his shoulders and has no idea, then that means he's neutral and it's yellow. If it's bearish, he's going to tell you it's bearish, and we probably will get more lows, and he would be red. Now, when it's neutral, this is not an indication to stay out of a trade. It just means that the previous high, all right, was not high enough to create a green PTF. Doesn't necessarily mean the trend is over or you shouldn't take a trade. All right, for example, all right, in this case here, all right, we've got a yellow PTF here, all right, and that was a 3 high. But when we have a wave 4 in, it may not turn green again until it gets way up here. So you may miss a trade if you wait for it to turn green. So this is why we kind of connect the dots and take a look at things. All right. Likewise, if you're in this wave 3 trade and been in it for quite some time, for 3 years, all right, and you're thinking about getting out of it now, all right, and you have a yellow PTF, then that may be a good point to get out of that wave 3 and then look to get back in later. All right, so there's many ways you can, combine the tools depending on what you're doing with the trade. Okay. Yeah, I like the arrows too on the Ninja Trader. Okay, what he's referring to are these little arrows off to the right. Okay. We're not going to put one on the ERI because most of the time it's yellow. It only occurs when you actually get a fear bar or something, or a greed bar like up here. Okay, so we can do that on Ninja Trader, but we can't do that on all the platforms. They don't have that type of coding capability. All right, in Ninja Trader 8, I'm just reading questions here. If I have all my charts linked to my scanner and I look for a stock on a chart, why doesn't it add the stock to the scanner? It doesn't work like that. You can contact Ninja Trader and ask them to give them some helpful feedback, but they don't do that because a lot of people will thumb through charts probably and not want them on their scanner. So it would have to be a separate link. And again, it depends how many people want that feature. If a lot of people ask for that feature, they'll change it. Otherwise, they won't. All right, what about risk control? Is everybody pretty cool with risk control? All right, and what the risk reward calculator does? I'm going to tell you, if you don't have the risk reward calculator, get it. All right, I just think this is a phenomenal tool because now you may have the trade size calculator, all right, but that's not the risk reward. The risk reward has this little area in here. And we have an upgrade. I think the upgrade price is what, 69 bucks to go from the trade size calculator to the risk reward. So it's pretty cheap. But what's great about this is when you put your target price in here, it gives you the risk to reward. And if the risk reward, my recommendation, if it's not 2, pass on the trade. And it's a great filter to keep you out of marginal trades. Because a lot of times, you'll look at something, you'll say, okay, well, the target range is here. My stop is here. I'd like to take this trade, but let me just see what the risk to reward is. And if it's under 2, you don't take it. So I think it's really a phenomenal tool that's so simple to use. So if you don't have it, my recommendation is to get that. All right, so let's see. I'm confused about when I put in 1% risk, it still had me spending most of my account money. What am I doing wrong? Well, I don't understand what you mean by spending. It has nothing to do with the cost basis, okay, of a trade. In other words, when we put in 2% of 50,000, what we're saying is we're not going to risk any more than $1,000 on that trade, because that's what 2% of 50,000 is. Now, if you go into a cheap stock and the trade size is huge because your stop and your entry price are fairly close together and it's an inexpensive stock, well, it's going to give you the maximum trade size so that if you're stopped out, you're not going to lose more than $1,000 in this example. But you may, if it's cheap enough, you may be using the entire $50,000 on the purchase. Okay. If you have a margin account, this thing's set to 150, and it's possible to go even into margin on that. But that doesn't mean you have to do that. It just says this is your, when it says trade size, this is your maximum trade size. So if you have a couple stocks you're thinking about, all right, then you're probably going to want to not trade the maximum trade size on this one trade. Instead, you're going to want to see what the trade sizes should be on the other, and segregate the different trade sizes, but never going over the maximum trade size on every trade. Okay, so I get your question. It's a good question. Hopefully my answer makes sense to you. So it only looks at what I lose buy and stop price. Yes. What if I don't get out at stop price, like it drops too fast? Then you're in trouble. Then you're going to lose a lot more. And what do we call that, folks? What happens when a market gaps way past our carefully chosen stop? No, not stupid. Okay, it's a good question. All right, what? Joy saying hell. All right, shit out of luck. Okay, you guys are funny. All right, it's market risk, right? In other words, it's very, when we use the either the trade size calculator, the risk reward calculator for trade size. All right, what we're doing is controlling what we call our trade risk, and basically, that's the risk we can control through our trade size, right? And that is all dependent, like Joy astutely noticed, of getting out of the trade. So if our stop was one tick under this pyramid and we use that as the exit price, all right, we use this as the entry price, well, then that's going to give us the trade size that goes in here, right? Now, let's say we have a terrorist attack, God forbid, and the market doesn't nicely do this, but instead goes from here to here, and we get a gap, and we get stopped out down here. Our loss is going to be much greater than what we calculated for, right? That's called market risk. That's why the only way to protect yourself against market risk is fund your trading account with risk capital. This is why I never trade my entire net worth, because if I have a market risk event, I stand to lose a lot more than my carefully calculated trade size, trade risk, right? So in doing that, I can tell you one thing. If you use this calculator all the time and you have a market risk event like this, all right, you'll probably be able to come back from it. But if you didn't calculate your trade size, you'd probably get killed. Okay, so I'm going to say about 99% of the time, all right, you won't get a problem like that. But you do get one every once in a while. But it's usually a setback and something you can recover from. Okay. So, for example, let's say you had $1 million net worth. All right. Now, as a general rule, all right, for an actively trading account, take an amount of that $1 million that you can afford to risk. For some people, that may be 10%. For some people, that may be 20%. But whatever that amount is, that's what should go into funding a trading account and no more. That way, if something happens, all right, you're not hurting because you don't have your entire $1 million at stake. All right, that's why you diversify and split off money into an active trading account for risk, and that's money you can afford to risk. Okay, does that make sense to everybody? Okay. Yeah, for the rest of the money, you put that into more conventional forms of investments. Okay, doesn't mean that it's not at loss, but time is not a factor. Okay. Well, that's why they make financial advisors. Joyce asking me what should I put it in. That's why they make financial advisors. Okay, these people will and I used to do that too. They'll look at your overall assets. They'll take into account your age. When you need certain lumps of money. For some people, if they have kids going to college, they know they're going to need X amount of dollars to fund that. So that puts a time constraint on the money that they can have at risk in the markets, and your age will be dependent upon that. But there's something called the Ebbetson model, which is developed at Harvard, and that takes into account diversification in a portfolio, which is exactly what you're talking about. All right, so there's models in which they do that, and then once you have that all situated, then that's what you do with the rest of your money, and you peel off a certain amount of money to trade with. That's what I recommend. Okay. Sure. Very good questions, Joy. All right, very good questions. I appreciate you asking. And I'll tell you, I can guarantee you there are several others that have have the same similar thoughts. All right, anything else? Because risk control, I got to tell you, is really the door that separates the pros from the novices. If you don't use risk control, it's just a matter of time, because short-term trading really is what they call a zero-sum game. There's a winner and the losers, and you have to use risk control in a zero-sum game. It's not like investing for the long term. Time is your friend as an investor. If you go into the stock market with a well-diversified portfolio and you put time on your side, meaning that you're going to keep that money in there for 10 years, then if you look at historical norms, then chances are in 10 years you'll have more money, okay, than you put in. And the amount of money will be a certain percentage each month based on the historicals, which is like what, 8%, okay? A year, rather, not a month, 8% a year, 8 to 10%. That will be your return after keeping that money in. But you have to be willing to keep it in that time period, because you may have times when the market goes down 30 or 40% like it did in 2007. All right, people panicked out of the market, and now look where it is. Okay, so you need to have time. Time is your friend with investments. Now, when you're trying to create cash flow, which is what we're trying to do with trading, then what you want to do is make time your friend, but short-term time. And to do that, you have to have a whole completely different mindset and set of rules that you're going to use for generating cash flow than passive investments. Okay, big difference. All right, and it's important to understand it. And with short-term trading, you've got to use risk control, because the whole premise about being successful, forget the trading system for a minute. The whole premise about being successful, I can't say this enough. It's so simple but so true. And you're going to know it as soon as I say it. Let your winners get run and be large, and cut your losers straight, and have a winning win-to-loss ratio and a winning payoff ratio, period. And that's all risk control. And then how you achieve those numbers is up to your trading approach. All right, so now let's see, I've got a couple more questions coming in. All right, even though your 2% trade risk is 1,000, you still need to reduce the account size by the amount committed to that trade. Correct, Richard, right. Good point. All right, so Richard's saying whatever the cost basis of the trade is, so whatever the amount of the trade, how much the trade costs, you have to subtract that amount from the account size. So any open trades you have after you commit the initial account size has to be subtracted from the account size. And you know, the beauty about doing that is eventually the account size will get so small, if not go down to zero, that you can't trade anymore. So that keeps you from over trading. And maybe it might only, you know, for a $50,000 account, maybe that's only 3 trades because, you know, it may be, you know, medium price stocks, one expensive stock, maybe a small cap, but, you know, you may run it up to 50,000 real quick. And so that means, you know, you might only have 3 open trades at that point. You may have a bunch of small caps under, you know, $10 that may allow you to trade maybe 5 trades or 6 trades. Who knows? Okay, it depends how much the price of the stock is. But yes, Richard, you're absolutely right. You have to subtract it from the account size. In Joy's example, you know, where she said, well, you know, I bought this stock and I traded the maximum trade size and it used all my equity, all my account. Well, then you can only have 1 trade open. And when that closes, all right, the amount you make on that trade, hopefully you make, you can put that amount back into the account size. So if you make 5,000 on the trade, then you'd put 55,000 in your account. If you lost 5,000, you'd have to put 45. Okay, that's how it works. And you put the cash account in here. And then if you have a margin account, you can indicate that through the margin. Now, if you trade the S&P E-mini, then, you know, you switch this to futures and the point value is 50 instead of 1, but everything else is the same. And you got to put the margin in. The margin is something your broker will give you. Okay, good, really good questions. Oh, my pleasure, Al. Thank you for coming. Thank you for your questions too. All right, so here's another question coming in. So when I look for a stock in the ad, an instrument, okay, all right, it can find it. I don't understand what you're asking. So when I look for a stock in the ad and instrument, where are you? Are you in the scanner? Okay, it cannot find it, okay, i.e. PAGS, Roku, things I know exist, nothing comes up. Well, do you put the symbol in or the name? You have to put the symbol in. Okay. So give me one symbol right now. Make sure you're choosing the right market, PAGS. I'll type that in. Okay, so there it comes up here. Now, you're using TD Ameritrade data, so make sure your scanner is set up for that. Okay, I'm sure it is. All right, and you know, you should be able to put that right in the scanner too. I would contact NinjaTrader if it's not coming up. You may have something with your data. Okay. Also make sure you're getting historical data from TD Ameritrade. I'm sure you are, but I'm just giving you kind of a checklist of things to check. Historical data means that it gives you data in history, the history of data. Some broker data, they focus on data for the day or short-term data. In other words, they give you maybe a couple days of data and that's it. But you want more historical data. And sometimes you have to ask them for that because it costs them more money to give you that. So they by default, they may not be giving you that. I can't remember what broker somebody had a problem with that on, but they had to call them and actually ask them to turn on the historical data. And don't ask me who it was because I really just don't remember. If anybody has an example of that, feel free to chime in. But Don't know. But even if you're not getting historical data, you should get the symbol. All right, so everybody good on risk control? All right, so once again, I just want to say if you purchased the cash flow course, glad you're liking it, and we're going to have a special seminar or webinar, one time only, on Friday, where you can come, and if you have any questions about it, feel free to bring them there, and we can address them amongst the group of everybody that has gotten the cash flow system. It is really a terrific strategy, and it's one that I think you're really going to like, because it's very, very rule based and very simple to implement. Yeah, Richard's right. Richard's telling me here that you might have to add the symbol through the instrument manager. And, again, I think that's a good question maybe to ask Ninja, because different providers of data require different things. Like I'm using eSignal right now, and I really don't have to add anything in, but there's some data providers that you do, and doesn't mean it's bad. It's just that you need to do it, okay, in order to get all the symbols. I'm trying to think where the heck that would be. Would that be on the chart, Richard, or is there a tool for that? Let me just see here. Instrument lists. Let me just see. Well, these are actually your instrument lists for, this is for actual scanning lists and stuff like that. Let's just see here, what else? Database management, maybe. There's so many little drop downs they have here. And I've really just never had to really mess with it too much, but historical data, here's historical data. Okay. Load. So there's a lot of little places in NinjaTrader, but I think if you email them, they'll tell you which specific place to go, so you don't have to go hunting through everything, okay? It's under tools within T7. So he says it's under tools. Let me just see. That's kind of where I was. So is it database management? When you're in, Richard, when you're in T7, is it database management or something else? Called instrument management. Probably the same thing, I guess. Futures. Update instrument lists. There's an update button. See, I would contact Ninja and tell them you're missing some instruments from your TD Ameritrade account. How do you update those into NT7? And they'll usually have very specific instructions on how to do that. And their support is good. Their email, you can't get them on the phone, but their email support is really good. So you just email them support at NinjaTrader. But you should definitely have that symbol available to you. Okay, Richard, thank you for helping us there. All right, anybody else? Okay. Yeah, no, that's there. You just got to get them into. Joy is saying she has them on Thinkorswim, which is TD Ameritrade data. So it's there. It's just need to get them in there. So find out. You may even have to contact TradeStation to make sure, not TradeStation, TD Ameritrade to make sure they're funneling all the data that you need into NinjaTrader. But I would contact NinjaTrader first. All right, well, geez, we're already past an hour. Can't believe it. All right, well, we didn't look at a lot of markets today, but we certainly covered, I think, a lot of interesting topics and good stuff. every week is different. Sometimes we do nothing but charts. Sometimes we talk a little bit in generalities. Today we did a little bit of everything, answered a lot of questions, and focused also on the risk control, which I think is really important for everybody to do. Okay. Thank you, Joy. Okay, my pleasure, and thank you. Thank you for the birthday wishes. My birthday was yesterday, turned 62. Not sure how I feel about that, but what can we do, right? We all get older. And in any case, I always thought 62 was so old, especially when I was in my 20s. I was like, oh my God, 62, you're done. And here we are, okay? So in any case, time does go quick. So make the most of it, enjoy yourself. And, I think trading is just a phenomenal business. I mean, it is so current, keeps you on your toes, all right, keeps you connected. I mean, you are connected with everything in the world in terms of what's going on financially, with markets and so forth. And so I think it's and the opportunity in trading the markets is phenomenal, because no matter what the economy is doing, whether it's, in a recession or in a bullish, good economy like we're in now, there's opportunities all the time. And so that's very unique compared to a lot of other vehicles that we can choose to make a career in. So I just think it's a phenomenal business. All right, the technology today makes it a lot of fun. But I will say one thing in terms of technology before leaving you, you need to become proficient in many aspects of your computer. And by this, I mean you need to understand how to do updates for Microsoft. You need to make sure all your trading materials or platforms are updated. And you also have to, now more than ever, know how to make adjustments to security software, because when you're dealing with so much data coming into your platform, you're dealing with so many different types of trading tools, that the security issues they don't cover all the bases, so they keep some of your tools from working. For example, you may download something and it fails to work because it gets identified as suspicious when it's not. And so what you need to be able to do is learn how to go into that security software and add it to your safe list, your exclusion list, so it works. And believe it or not, that could be pretty, for some people not used to doing that, that's a big roadblock. So you need to understand how to do that. And there's different areas you may need to add it to an exclusion list, not only into the exclusion list of scanning for viruses, but you might need to put it into an exclusion list to allow it to communicate outside your computer. All right. In other words, either get data or get authentication. All right. Or you may need to, because there's so many different types of, if you get malware, you have that type of thing. You have to make sure it doesn't get flagged at, because a lot of good programs get flagged as malware. So you have to add those to your exclusion list. Then the next question, a lot of questions will be, why does it get flagged? Well, because a lot of times the companies are not Fortune 500 companies that are producing this software. So a lot of times the people that are making the security software don't even know they exist. And so they flag it as malware. But they do at least give you an area to add it to a safe list, but you have to know how to do that. So as we get more security conscious, more technology oriented, not only do you have to know trading, but you have to know all the ins and outs of your computer. So I think that's important to talk a little bit about. So if you ever want to have a session on that, on security software and stuff, I'll be glad to do that, because I've used many, many different types. And that's one of the things that's I think gives people a real hard time. So I think that's important to kind of master and know how to do. I think this was a really good session. I really appreciate everybody coming here. All right, well, thanks everybody. Okay, so we'll see you next time. Have a great week. Use risk control, and I look forward to seeing you all next week. Take care. Bye.